Hey traders, we are live. Okay, I'm just getting the correct audio set up here. It doesn't look right. Hmm. What's going on here? Sorry guys, I'm just not sure if technically we're set up correctly. Because my screen seems to be blue and my audio is okay. I think we're ready to go now. Sure why the screen is not showing properly for me. Very strange. Okay, if somebody is in the chat and can tell me if the technically we're okay, like if this is also streaming with a blue screen, then I'll have to sort that out. But anyway, let's kick off, because if everything is actually working and I just can't see that it's working, then we might as well have our session. So, awesome session today. We're going to talk about trading mistakes versus trading sins. And I'm actually going to open my trading chart and show you step by step something that happened to me this week, so you can start seeing a bit more how I actually trade. Now, why are we doing this session? Why this session? Why now? So what I see a lot of, it's really common, and I was exactly like this as well. Oh, now we've got lighting issues. What is going on? Okay. Is that when we're stuck as traders, when we just can't get consistent, we can't become profitable, we almost don't know what is wrong. So my first conversation with traders often is, what's the problem? And it's just everything. I can't make this work. I can't do anything right. This lighting is really not ideal. but like my technical setup today, can't do anything right. So, where do you start? So for me, it's a bit like the whole mountain. You want to conquer the whole mountain and you don't know where to start. So what I like, the phrase I like to use is, how do you eat an elephant? Well, you eat it one bite at a time, because this is like a mountain you're trying to conquer, and it is one step at a time. But what is that first step? How do you start? So you're kind of, scrambling halfway up the mountain and nothing's working. So you need to go back and actually look at the fundamentals. What do you actually do? So I like to divide this into two things. There's mistakes and then there's sins. And the place to start is with the sins, because if you're trying to fix everything all the time, what you're going to be left with, and what traders are left with, is just a feeling of you're useless, you're a failure, you can't make anything work, and it's going to affect your self-belief, your confidence. And that is not a place you want to be. You want to be trading with a lot of belief and a lot of confidence. So if what you're doing, because you're trying to just race straight up the mountain, is leaving you with no confidence, it's affecting, it's keeping you back from doing anything good. Okay, so we need to kind of break up this elephant and eat it one step at a time. And unfortunately, the way we're taught trading, because most of us are self-taught, this isn't really a university course you go and do. Nothing's usually that structured. So we're all starting just wherever we think is best, or someone's telling us is best. And because it's not a structured approach, we sometimes have to go backwards a little bit and restructure it and reframe things so that we can move forward in an orderly way, because that's how you're going to get up the mountain. The way I sometimes see this is, it's kind of like you've been given some great tools with trading, and it's the equivalent. It's kind of like you've been given a race plan, and now you're at the Olympics. You're in LA 2028 and you're ready to run this race. And then you're frustrated that you're not winning the gold medal. But the fact is that you haven't been taught how to walk yet. And now you're not even, it's not even like you're trying to run. You're trying to run at the Olympics and win the gold medal. And then you're feeling horrible about yourself because you can't do it. And it's like, well, nobody's taught you how to walk properly, let alone how to move that into running, and you want to win the Olympics. You can win the Olympics. We're going to get there. It's actually not even nearly as hard as getting to the Olympics and actually winning a gold medal. It's nowhere near that scale, but this is kind of the equivalent. You need to actually go back, break things down, and start with the right approach and the right steps, and fix the right things first. And then you can add to that and get to the Olympics and probably win the gold medal. So that's what we're doing today. We're going to identify what are the actual sins. Now, when you get these basics right first, you can build on that. But you can't try to do everything correctly all the time. It becomes overwhelming and you will end up not doing anything right. So that's my ask for you, is to just take 2 weeks, 3 weeks, 1 month to just slow down and get this right. Focus on only getting these sins out of the way, because then you can build. And I promise you, the building curve then becomes exponential. It's just super fast after that. But everything seems slow because you don't have these things sorted yet, and you're trying to build on top of it, and the foundations are shaky, you're sinking, so it feels like you're not getting anywhere. So sometimes you have to go slow to actually go fast. Okay, let's get straight into it. There are 3 sins, and don't even try and improve anything else until you nail these 3 things. You have to. This is like putting one foot in front of another and just having that kind of like walking properly so that you can then run and then you can sprint at the Olympics. This is just walking for traders. You have to focus on this. If you do nothing else, if every day you're just like, I didn't do these 3 sins, you're starting to develop an amazing foundation. Okay. Number 1 is you must understand and calculate and obey the sizing to manage your risk. Okay. This is the size of each trade you take. And this is so that when that trade is a loss, it's not a huge loss. Your loss should be calculated and very systematic, the same small loss. How do you calculate it? So this is the risk, okay? The dollar value that you are willing to lose on on any trade. There's a max dollar value you are willing to lose on any single trade. This dollar amount must stay the same. It's usually calculated as a percentage of your equity. And the percentage is not 1%. That's a fictitious number. But the 1% or the percentage calculation is so that your dollar amount stays the same, relatively the same compared to your equity. And that dollar amount stays the same. The size of your position on each trade will change slightly depending on how large your gap is between your entry and your stop loss. So if you've got a very wide gap, lots of pips, your position, your sizing is going to be smaller so that your dollar amount stays the same. The dollar amount has to stay the same. You can't just trade the same position size every time and sometimes put your risk, your stop loss here, and sometimes put your stop loss way there, because your dollar amount is going to swing wildly. This is the stuff that blows accounts, okay? You might think you're doing it correctly, but if you're not, you're on occasions going to take huge losses, and a few huge losses blows accounts. It also affects you psychologically, so that you're far more likely to start doing other things like revenge trading or having emotional issues, and it affects your trading. You must calculate your risk size correctly and never ever deviate from it. Okay, not calculating it and then deviating from it is a sin. You cannot do this. This is like if you're doing this, it is like you are trying to win the gold at the 100-meter sprint, but you can't walk yet. It's so fundamentally important. I just want to pause there and see if hello. Okay, seems like everything's working. How should you calculate it if it's not 1%? Okay, you need to, let's pretend you have a funded account. Most funded accounts you will lose if you overrun the 5 or 6% loss. So you need to work out 5% of the value of your funded account, and then that dollar amount divide into, my suggestion for you is 40, so that you can quite comfortably sustain 40 losses. Why 40? Well, you're probably at the stage where you're going to make quite a few mistakes still, and a strategy that has a 60% win rate has a 40% loss rate. Out of 100 trades, you could have 40 losses. It's unlikely, but it's not impossible for all of those 40 losses to come in a row, in one hit, or possibly half of those come in one hit. Add some mistakes in. This is a really comfortable number to have. It's my suggestion to you that you have the ability to sustain 40 losses without losing your account. Psychologically, it's the right number. Now, if you want to be more aggressive you can move that to 30. If you want to be really aggressive, move it to 20. If you move it below 20, you do that on your own, decision making, but you are risking easily getting to 10, and then your psychology is going to be affected because suddenly you're under enormous pressure. Your account is starting to dwindle fast. Why is 1% an insane kind of number that's out there? Because if you have 5 losses or 10 losses in a row, it's really easy to have 5 losses. In fact, that's standard. That should just be expected. 10 losses in a row is very easy to get to. Now, if you've risked 1% on each loss, you're a 10% drawdown. Your account is gone if you're in a funded account. And if you're in a private account, 10% starts becoming worrisome if you're not a comfortable, confident trader yet. Okay, 1% is not a number to use until you are a very, very experienced trader, and even then I wouldn't use 1%. So recalculate your risk. Okay, use these numbers I've provided you. Even though they seem small, you can, when you don't have the psychological pressure, everything else with trading is hard enough, but you can actually string together some wins and hit a great curve run on your equity really fast with these numbers, and then you don't blow out. The most important thing is to protect your capital, and you do that through risk. Focus on protecting your capital like this. Stop focusing on, but what does that mean for how quickly I get profits? The profits will come really fast when you stop blowing accounts. Okay. So number one, absolute sin. You must sort this out. It is fundamental. And if you do nothing else but get your risk correct for a string of a month, and you stop making any mistakes on this, you stop just using incorrect risk, that's number one. I haven't incorrectly sized or risked for years. I don't do this. It's just unheard of for me. It's like it just doesn't even come into my brain that this is something I can deviate from or get wrong. It's part of just who I am now. That's where you need to get this to. Okay. The second sin you may not do anymore. You need to stop this immediately. And again, focus on only improving this. Forget everything else. Just these sins, if you only focus on these things, okay? Using stop losses, having that level where that trade is done, that trade does not exist anymore, that trade is proven that it is not a trade for you. A stop loss. If you're scalping, and because I have spoken to a few traders that are like, I can't set the loss because there's reasons, it's timing. So it's a mental stop loss. Very hard to, you're making the job way harder for yourself. If you have a mental stop loss, you have to use it. Okay, stop loss is non-negotiable. Again, I have not for years not set a stop loss or moved my stop loss. It's just part of my fabric of who I am. It doesn't occur to me not to use a stop loss. As soon as I've checked the trade, the first thing I go and do is hover on my stop loss line and check that that aligns with my dollar risk, and it's there. It's just, I click order, place the trade, and then I go and physically on the line, on my chart where the order is placed, I hover there and make sure that that exists. The stop loss is there and the dollar amount aligns. Now and again, I make a mistake. I've done a typo. It doesn't mean you can't make mistakes. And we're going to get to mistakes later. This isn't, you don't have to be perfect, but the act of doing this, you can still make mistakes with getting it wrong, but the intention to do this, so putting it in as it's one of your steps, you just do it. You just calculate the risk and do it. You might still fat finger things, you might calculate it wrong, but you've got now checks and balances to go and check that you've done it right, and then you just fix it, okay? It doesn't mean you have to be perfect, but what we don't want is you just not doing this stuff. Okay, that is a sin. That's the sin. It's not the being perfect about it. It's a sin not to do this. Stop losses. It's an absolute crime if you're trying to be a trader to not use one as the strictest. It's like a religion, sacrilege not to be using it. Okay, don't try and improve other things. Don't try and become profitable. Don't try and get better entries, improve your run rate, improve your risk reward. Don't try and do anything else if you're not doing these things yet. Get these things right, because then you're going to have foundations to build on. And the third one is revenge trading. Now, there's variations of it, and I'm not including FOMO in this. But FOMO can lead to revenge trading. Revenge trading is when you are getting into your computer in an absolute rage, and you're just, when you are doing it. Okay, and some of us, it's going to be harder to stop this than others, but this is when you're emotionally completely out of control and you are trading. Sometimes it's going to be FOMO, you're just entering anything because you're in such a rage about it. But that is actually revenge trading. It all falls into revenge trading. Revenge trading, you have to stop. It is a crime to be in a rage, feeling anger, just like, I'm going to show them. If you are in that kind of out of control anger feeling, and I've been there, I know exactly what it feels like. I actually, very lightly, because I don't like to injure myself, but I kind of like just lightly punched a wall. But what I really wanted to do was smash through that wall. That's how I felt. I felt just, if you have feelings like that, you need to focus, spend the next month, 2 months, I don't care what it is, only understanding or becoming aware when you are like that and walking away. Go and do something else. Go and punch a wall. Go and punch a punching bag. Go and jump on your trampoline. Go and plant a rose bush. I don't care what you do, but don't sit at your chart. Go and do something else. Now, but it's so hard to do that because revenge trading is emotional. Okay, that's fine. But here's the baby steps to doing it. Maybe the next week, because you are a revenge trader, you're going to revenge trade. But as soon as you stop, I want you to become aware that that's what you did, and spend time writing down what led to it, try and understand it. Okay, it might happen again. Try and understand it. You're trying to get to the point where you can become aware in the moment while you're doing it and go, what am I doing? Oh, I want to do this, but I'm going to walk away and I'm going to go and run a mile or whatever. Slowly, you're going to get closer and closer and closer to becoming aware. So usually you're going to become aware after the fact and be like, okay, I shouldn't have done that. How am I going to try and stop it tomorrow? Okay, tomorrow, you're going to slowly improve. Eventually, you need to become aware of it as it's about to unfold. Even if you open your computer and you're about to press the button, then you're like, okay, I'm revenge trading. My only job now is not to do this. You're not now trying to win the Olympics. You're not now trying to win the gold medal. You are just trying to manage this moment. That is your only job. And the reason we often can't manage these moments is because we're having to manage this moment while trying to win the Olympic medal. And then we're disappointed with ourselves because we didn't win. Don't try and do everything. Stop trying to conquer the mountain. Stop trying to gobble that elephant in one bite. This is your only job, is to work on these 3 sins. Because once you have that ability to become aware of this feeling, what's going on with you, and you can stop it, go and do something else, this is when you start getting control. Okay, and when you have control of these 3 sins, these are sins, these are crimes. When you have these 3 sins under control, completely under control, you can then start to improve this, improve that, stop doing so many other mistakes. Every other mistake becomes just tiny, inconsequential compared to these. These are the 3 things that are, one, going to blow your account. It's going to cost you a lot of money if you don't just pause and focus on these 3 things. Secondly, it's going to keep you stuck exactly where you are in the cycle of failure and loss, feeling terrible about yourself because you're not taking the time to just build these foundations. Once these foundations are there, everything else you work on is going to improve that equity curve exponentially. You're going to then be able to just soar and fly and start improving in ways you never thought you could. But you can't do that improvement when you're basing everything on these soggy foundations. Okay, that's it. These are the 3 crimes you must stop. And if you only focus on 3 things, get yourself a small account, reduce your risk to the smallest amount you can, and just start trading and managing these things. So you're not worried about profits. You're not worried about achieving the Olympic medal now. You just want to trade your account for a month, 20 trades, 40 trades. Set a goal for yourself, and your only goal is to have these 3 things under control. Then you can start moving forward. And you might actually, when you stop trying to do everything, you stop trying to gobble that elephant in one go, and you're actually just doing one bite at a time, you might find you can get this under control in a week. It can actually be that fast when you are focused on improving something. Okay. Trying to do everything at once is it's impossible, actually. So the fact that you've been churning your wheels, staying in the same place, and then feeling terrible about yourself makes complete sense, because you're trying to do something that's impossible and then blaming yourself for it. Okay, so we want to focus on sorting these 3 things out. Now I want to get into mistakes, because after this, after you've got these crimes completely under control, you're going to keep making mistakes, but they kind of don't matter, because they aren't going to lead to account blowouts. They're just going to lead to learning experiences. Now, you cannot achieve success without mistakes. And some people call mistakes failures, but failure and mistakes is what leads to success. You cannot have success without the learning curve of making mistakes, having small failures. Now, sorting out those crimes is going to mean you've got foundations to build on so that you can make the learning mistakes that it's going to lead to your success. Okay, that's how it works. I guarantee you, if you structure your approach like this, you will become profitable. You will achieve whatever you want to achieve. But I also guarantee you that if you're trying to do everything at once, you won't go anywhere. Now, last week I explained the story about Flight 173. So if you weren't on the webinar, go and watch it. But Flight 173 was a series of mistakes that pilots made that the airline industry then fixed. And because of that mistake, which wasn't the pilot's fault, it was the design of how the cockpit management worked and how they were set up to work, the pilot ended up making catastrophic mistakes that the airline industry then understood why he made those mistakes. Okay, any pilot would have made the same mistakes, and it led to people dying on that crash. The airline industry then fixed those mistakes. They went, okay, well, let's do it like this, let's do it like that. The fact that that flight had those mistakes in it has meant the airline industry has become so much safer. The success of the airline, it's enormously successful. The number of crashes per millions of flights is one crash per millions of flights. It's an insane success story, the airline industry, compared to other industries, because of the way they approach learning from mistakes. Okay, some mistakes are catastrophic, but they sorted out the crimes in the early days of getting planes up into the air. That's what you're doing now. You're going to sort out these 3 crimes, and then you're going to keep making some mistakes. Like, they haven't gotten to the success that they have now without some mistakes made along the way, because they didn't know that those existed. They didn't know that those were things that could affect flights. So that's what you're going to move into once you've sorted these crimes. You're going to then keep making mistakes. They're going to be small, but you're going to learn from them. And that is the cycle to success. Okay, so you're not one day going to be perfect. You just want to improve. And that's why I keep talking about 1% improvement. Keep improving. I want to now just show you my chart and show you a mistake I made this week trading. And I want to step through exactly how it happened, because I think it's good for you to see that I'm a successful trader, I'm a profitable trader, but I can make mistakes like this, and it's, in hindsight, it's a pretty silly mistake, but also just kind of hour by hour how it affected me and how I managed it. So we can see there now. Okay, I'm going to show you, this is my chart. This is the euro dollar, and the time on this chart is on the 1 hour, and this was on Friday US time, about I think this is about 10 in the morning US time. Now my chart is in New Zealand time because I'm the other side of the world. So I trade, my strategy and my trading routine is set up for me to trade the best I can in the global markets. I was taking a long here. Now this is 3 in the morning. You can see the time stamp at the bottom of my screen there down here. This candle is my entry candle. It happened at 3 in the morning. Now, let me talk you through what led to this moment, and then how do I trade it. I'm trading long here. I've got a historical. You can see that there's some trades up here. I trade on trends, and this trend for me had just turned long, and I'm prepared to take one more long trade before my expectation is that price will turn around and reverse for a small little amount of time. Now, don't use anything that I say now to impact any of your trades, because my trading strategy is very specific. It's very nuanced. It's not always right, but it gives me the best amount of successful trades. And there's a history. So I've got days and days with other trades in between that has led to this moment. I did not just arrive at the chart at 3 in the morning and take a trade. This trade was set up. So my previous day, I would have liked this setup to be a little bit more robust, but it didn't set up for long and it just ran. So I was still long and I was waiting for a longer setup. This is a great little retrace. These are the kind of retraces I like to see, and I form a trend line along the top. Now there's a body count in here, certain patterns have to form, and this is actually for me on the specific trade is a 5 wave 1, 2, 3, 4, and 5. So it's finished its retrace. So as you can see here, I couldn't really get the 5-step retrace. I couldn't make this work. But now this is setting up on my retrace. It's beautiful. But I've been watching this since the previous day. And on the previous day, I'd also been watching it. And I wasn't able to get in on this situation here. I've now got 2 days where I've been watching, monitoring. You know what it's like when you're waiting for a trade? You're like, is it this hour? Is it this hour? Now, I don't show up every hour. I show up at very specific times of my day that give me the best chance for the price should have resolved, liquidity should have been taken. This is when the action should happen. Got very specific times. But my point here is I didn't just show up to take this trade. I've been preparing for this trade for 2 days now. Okay. At 3 in the morning, I'm not trading. I'm asleep. Let's just be clear about that. And what happens with these US trades is that when the day in the US is finished, my day starts. I'm just going to fast forward a few hours when the day is finished. Okay, this little line here shows the day is finished. It's 11 o'clock for me. So I actually come in the morning and I see what's happened. So before 11 o'clock, I've already seen this candle. Now, what happens when I see this candle is I put a this candle for me, it's at the right time. It's at 3 in the morning, and I know that's a great time in the US when action happens. It's broken a trend line. It's broken an MA. There's a few other tricks I do. This isn't in isolation, so you don't use this to trade because there's a lot of false trades in this. And I do get losses, okay, because there are false setups. So do not trade this as I'm explaining to you. I'm trying to show you my mistake. But basically, when I wake up and I see this, great. It's been 2 days of me waiting for my trade. I then put my anchor box, I call this trade an anchor, over the high of that candle and the close of that candle to the low of that candle. And then my rule is that I then take a 50% retrace, and this should be the trade. Okay. Now, what mistake did I make here? I just want to fast forward one more candle. Okay. So at 11 o'clock, I'm setting up my trade. But we're starting to get into this time now, and you can see prices above my entry there. Okay. And I run these trades for 5 RR. Okay. Now, what I wanted was a bit more of an aggressive entry. I wanted my entry price to be up here above the 20 MA, which I can do. I can outright just move my price there, whether I'm trading this at 97 pips or up here. And these are actually, so I think that's actually 9 pips and this is 14 pips. These are quite small sizes, small pip sizes for me. So I like to kind of trade between, I'm just going to call it its proper number, between 150 and 100. So at 142, it's kind of getting a little bit higher. And what I've been doing was I am doing some testing at the moment where instead of using the low of this candle, I'm using the open. Which means I can move my stop loss up here. And I'm testing it. It works often. It doesn't work all the time. And I'm in the middle of testing it. It's showing some good results. Because this had already pipped down here, I put my stop loss there at that open. Now, why did I make this mistake? Why didn't I leave my stop loss where it should be? Well, this is where it's one of those, did I have some FOMO going on? A mild form of, I really wanted to get into this trade and I wanted it to be more aggressive. I didn't want it to not hit my entry. And, you know, it's very feasible that I had FOMO going on. Now, at the end of the week, I actually do an analysis of my trading week, and I'm going to deep dive into what led me to make this mistake. Now, I didn't blow an account, it just led to one stop loss. But I need to understand what was it. And part of it is that because I've been testing this, it's easy for my brain to believe that this isn't okay, that I was following my rules. I've been kind of testing that I can use this as a stop loss. So it's easy for my brain to believe that I'm still doing the right thing. Okay, in hindsight, everything becomes crystal clear, right? So this is what I did. Then we let the trade play out. And I get pipped out here. Okay. That is, if you zoom in, that's a micro, that's the teeniest of little pips there. Just pipped me out, and then immediately we get this pipped out, and then this candle, this was right at the end of this candle, by the way, and then this candle ran. This is now 10 o'clock at night, and I'm having a look, and suddenly I'm like seeing these green dot candles, and I'm like, okay, I've just been pipped out. This is actually going to probably be a great trade. Now I've got the feeling of, I was annoyed because immediately, as soon as this happened, everything became crystal clear. I was like, I shouldn't have done that. This entry, my original entry as it was, if I just put my entry back where it should have been, this 50% entry, perfect, loads of opportunities. And my original stop loss, perfect. You know, it's not getting near there. Okay, it would have been here in a loss for a few hours. I've got no problem with that. Immediately, this is crystal clear to me. It's like, oh, you've made a mistake. Now you're faced with that feeling of, do I just get back into this trade? Now, I just want to take you back to the history. I've been waiting for this trade for 2 days. Okay. It's late at night, 10 o'clock. I'm about to go off to bed. And you're left with this, do I just jump back into this trade because I have this feeling this is going to be a great trade and that was just a mistake? Well, here's the thing. I didn't jump back into this trade. Why? Because my rules say I have one opportunity, and that's me trying to be accountable to myself. I've got one opportunity to follow my rules. If you don't follow your rules, that trade is missed. It's counted as a mistake and you're out. Why do I have this rule? Because this trade, and let me also just put on the 5RR, this is just standard. So I set it a target and then I leave the trade. So I'm asleep now. And this, the next morning, it's kind of halfway there, but it's still holding the 20 MA. But it doesn't matter. None of this matters. I'm in the trade and I'm prepared to wait. Okay, and there it hits it a bit later in the day. Okay. Now, let's just go. There's my trade. Okay, perfect trade. So easy. This is my bread and butter. But I made a mistake. Now, why have I rationalized that you get one opportunity and then you're out of the trade? This is just a mistrade for me. At the time, how did I feel? I was frustrated. I was, it's 2 days of work, 3 days when you count this. We're into day 4. I was frustrated. I'm human. This is how I feel. I'm disappointed with myself for making a mistake. But I I get trades all the time. There's always a new trade to come. There's new trades being set up right now. There's loads of these trades. I've got a great profitable strategy that has loads of trades, enough for me. I don't need multiple trades a day. I usually take one a day. Some days I don't get any trades. That's just how my strategy works. It's perfect for me. And I like this kind of couple of days of setting up. My strategy works for me. Now, why am I not chasing this profit and jumping back into the trade? Because not all of these trades work out. These trades sometimes have fake out, they fake out, and then they will come and take more liquidity. If I start chasing profits, I can end up with, where do you stop? I can end up with a string of losses just on one little segment. Okay. When these trades play out, when my setups play out, they usually work. If they don't play out, it's usually going to range, and you can amass a huge amount of losses on one play. So I've pre-planned this. I only get one chance at an entry. If I blow this trade because I make a mistake, I'm out. I go to bed and I just wait for the new setup. I kind of started fresh because my trades are based off higher time frame setups trends. I don't just jump the chart and just trade any 1 hour candle like this. The reason this candle is so important to me is because of everything that's gone before it. Now you can kind of see this candle. Oh, why don't you just trade that candle or this candle or this candle? There's quite a few candles here that are in theory doing a similar job to this candle. They're breaking the 20 MA, but they're not my candle. I can't just jump on them. And while there was some FOMO in my mistake, I can admit that. And I'm starting to unpack this trade more and more. Just talking about it now, I'm understanding, I think, what was going on in my mind. Definitely a bit of FOMO because I had I think my strategy is great and I had a great feeling about this trade and kidded myself about how legit this was as a stop loss. Sometimes those trades work, but it's not, I haven't found the back testing results yet to go, that's my new stop loss versus it's not. So it just wasn't part of my rules yet. So absolutely FOMO was playing a part here. But what I didn't do was the cardinal sin, which is start to revenge trade and FOMO trade in here because I'm disappointed that I've blown this trade. I had a moment. I had to go to bed here at 10 o'clock feeling, oh, that, I'm sure this is going to be an amazing trade. And I'm sitting on the sideline. But that's my job. That's my job, is to sit with feelings like that and do nothing, because that's my rules. What you're going to do now, working on your sins, and sometimes it's painful. I've done that. I still have painful moments. This for me was painful. The pain though was just fairly short-lived and manageable. It loses its impact because this isn't my first rodeo. This isn't the first trade I've made a mistake on. But I know that if I don't succumb, if I don't just roll over and give in to the FOMO and the revenge trading to get this profit, that would have worked in this instance, fine. Doesn't matter. It's the principle of it, because there are times, and I've traded those times when this just leads to loss after loss after loss. So you're feeling bad here. When price is over here and it's ranged and taken you out 5 times, you're going to feel a lot worse. So that is just how I trade. It doesn't mean that I just gloss over this like it's nothing. It was annoying. It was frustrating. I didn't want to punch a wall. It wasn't that frustrating. Because I'm like, well, there's another trade coming and these things happen. These are mistakes that you'll make, and they just won't. This is a small loss. It's the right size loss. I didn't over risk this. I didn't make multiple mistakes. I made one mistake. move on, forgive myself. By the morning, I was fine. I was like, okay, what I love about this is that the actual trade would have worked. This has gone into my back testing. Whoops. This has gone into my back testing results, and I'm thrilled. Okay. There's always something to learn. This is one more trade in my back testing to give me positive results that give me confidence about my strategy. So, guys, I'm going to end there. I hope that this was a bit insightful in terms of how a trader that I am a consistent trader, I'm a profitable trader, that I will still make mistakes. And this is how I deal with a mistake, how I deal with a loss. And even harder is dealing with a loss that shouldn't really have been a loss, but it was. And another week, this will be an amazing trade because I now have, while I'm testing this as a new place to place a stop loss, I've also made this mistake. So next time when I'm thinking to myself, oh, is this a rule? I think I can do this and I'm still within my rules. I'm going to be like, no, I know it's not. I didn't make that mistake. I didn't place my stop loss there and go, I'm breaking my rules. I didn't do it on purpose. I didn't go, oh, I'm just going to put a caution to the wind. This was an unconscious mistake, but black and white, I broke my rules, but unconsciously. And these are mistakes you're going to make as a human. Forgive yourself, learn from it, move on. That's where you're going to move on to. That's the process you're going to move on to after you've sorted out these cardinal sins, these crimes. You've stopped committing crimes against trading, okay? Then you're going to move on to this phase of you'll make mistakes, but it just leads to success. There's always something to learn, and it's going to get you to success faster. So, guys, I really appreciate you tuning in. I absolutely agree, Nelson. It's a sin. It's a big sin. It's a big sin. I appreciate you guys tuning in, watching. I appreciate the work that has to go into improving your trading. I've been there. If you've got any questions, leave them in the comments. If you like this, leave me a comment. I come and click them, and I love chatting trading. If you've got other questions or issues you're dealing with, let me know. I can do a webinar in the future. I am now done for the year. Next week is Christmas, so I won't be doing a webinar. And I am back on I think I'm back on the 8th of January, possibly the following week. But I will I'll give you all an update in my Discord. Guys, if you are interested in coaching, there's a link below. Reach out to Gerald. Find out if it's right for you. We could set up a free discovery call. Nothing is going to get your trading going, get you sorted with what mistakes you're making, with what your issues are, and get you moving forward faster than one-to-one coaching. That's just a fact. But if you're not feeling like that's right for you yet, then keep watching these webinars, join our Discord, get involved, ask questions. We're all here to help. And join me on my YouTube channel. I try and do daily videos, just sharing what I'm doing, sharing what I'm learning. I talk all things mindset and psychology because it's the foundation for everything else. Once you get that right, you can trade any strategy. You can improve your risk. You can trade bigger risk. You can do whatever you like. You can, the world is your oyster once you get your mindset and your psychology right. And once you get it right, you don't go back either. It's you need to commit to doing it. It'll take a few months of work, but then you'll be running, you'll be sprinting at the Olympics. And the best thing about trading is you just have to go to the Olympics and you're a winner. You don't have to win the gold medal. You don't have to be the best. You just have to be good enough. You can still make mistakes. You can make loads of mistakes and still be a great trader. That's the beauty of, you don't have to be perfect, but you do have to stop committing these crimes against trading. Okay. Have a fantastic Christmas. Appreciate you all. And I'll see you next year.